Okay, so this part is I'm going to start looking at an example. And what I'm going to do is I'm just doing this live. I mean, when I say live, I haven't um, pre-done this. I'm just going to do it just to prove that literally this is an exercise in double entry. And because I'm interested in all the cash movements, you want to have all the cash movements and know what's going on. And then all we're coming back to do is just to place things within these three headings of cash flow from operations, cash flow from financing, or cash flow from investing, and cash flow from financing. But it's important to know what the actual cash flows are. That's the most important thing, which means that the appendix to this type of exercise is critical because you want to show the examiner that you've found what the cash flow is. That's the hard bit. The other bit is just putting it into the statement. So I'm going to start, literally, I'm creating an Excel sheet. Even if it doesn't take me, probably will take me longer than 10 minutes. I will break up the video, but I'm literally walking through slowly, and then because I'm using Excel, I might be slightly slower, but that's what I'm going to do. So let's begin. I'm not even looking at the actual points yet. I'm just getting all the information into one massive Excel sheet. I might not need to, but I just want to because this is a working exercise. And then I'll show you probably when I say the best way, how do you get all this done quickly? Right, so here I have here, because you see everything has the potential movement for cash. So let me start. So remember the other thing, that's very tricksy about this is that always be clear on the direction of the years. Some exam questions will place it like this, X7. There's no convention. I can't agree. When I say I can't agree, I mean I've seen questions where you'll have X6 and X7 on this side. Here you have X6 on this. So it's always being very awake to what direction in which things are moving. Right. So here I have this intangible asset. So I'm going to start with that. It says intangible asset here. I'm just going to kick off here and put here intangible. So yes, you can do it, I guess, alongside me as well. Intangible asset, and it says here you're starting with 410. So you're happy that here you have 410. I'm just going to put the numbers in. And then here, so that's the opening. I'm thinking because of time, do I have time to write these all the time? Opening balance. I guess I can cut and paste. And then I have here carried down. Here I have here 450. So what will happen will happen. We'll see those as we go through the question. Things will happen in the year, but this is the opening and the closing balance, of course. So let's carry on. Then I have my PPE. Yes, PPE. Again here, opening balance. Oops, sorry. Opening balance here. Here I have here 1830. 1830. And I have here carried down 2480. 2480. Okay, right, great. Then let's just carry on going. Then I have here inventory, and I'm literally doing the same thing, even for these ones, just because the double entry just proves it, right? Here I have here 763. Oops, sorry. Yes, inventory 763. And the closing balance, it's just a tool, right? But it's a tool that works. 920. But and don't worry, I won't go over the 10 minutes. I'll try and keep it within. Receivables 472. Receivables 472. Closing balance 642. So here I have my opening balance. Here and I have, oops, sorry, I'll just put opening B. Oh, OB. OB. Okay, yes. So I have that there. And then I have here, then there's the cash, because that's what we're interested. We're trying to understand how has cash gone from 34 to some overdraft somewhere. I'm not even interested in looking at that. I'll find that out later, because that's what I'm trying to find. So I don't put a double. I don't do anything for cash. This just comes at the end of the statement, and you'll see how this presents itself. So you have an opening balance plus all the movement and getting to your negative balance we can see in this scenario. All right, let's look here. Equity. What do I have here? I have share capital, so ordinary shares. I come straight back up here. Ordinary shares. So it says here, ordinary shares, you're starting with 400 and you're ending with 500. Ordinary shares, you're starting with 400, opening balance, 400. Your closing balance is 500. So stick to this and you'll be fine. Because that's actually what is happening, isn't it? Retained earnings, I can do the same. Yeah, I'm just going to do the same anyway as my opening balance of 1732. And the movements, of course, are profit movements, right? Of course. Retained earnings. I might not need it, but I'll just do it. Doesn't matter. Opening balance 1732. And the closing balance 1871. Carried down 1871, I believe it was. Oh, let's see. Oh, yeah, 1871. Okay. And then I come back here and I have my share premium account. Share premium. Starting off with 70. Opening balance 70. Closing balance 90, I believe it is. Let's just have a look. 90. Then we have a revaluation surplus. I mean, I'm just going to create a T account for it anyway. Revaluation surplus 70. It's gone from nothing to 170. Reval surplus. To be fair, that doesn't hit the income statement, so that's fair. That goes through other comprehensive income, doesn't it? The other comprehensive income is what happens there, but I'll just do it anyway. Opening balance, nothing. Closing balance 70, I believe it is. 70. Okay, we're almost there. Sorry, 170. Yeah. And it's not a bad question if you get a whole question on it. You know, you could, but again, it's just being clear about that. And then we have here non-current liabilities, loan. So we have a loan, very clear there. Loan note. So we have nothing, opening balance, nothing. And then we have a closing balance carried down 200. Yes, here we are, 200. That's that. I'll put 0 here. And then we have here next 10% redeemable preference shares, 350, 350. I'll put that in anyway, again. 10% redeemable pref. Opening balance 350. Closing balance carried down 350. Government grants, opening balance 160, closing balance 210. Opening balance 160, closing balance 210. Oops, yes, opening. Because remember, I think it's really important to always be very aware that you can see it says here liabilities. So it's really important. That's your guide straight away. Deferred tax Um, I always recommend do both together because typically that's how the tax is paid. So deal with deferred tax and current tax together. So I'm going to do them together. Um, I'll just put deferred, deferred, and and normal tax together. So opening balances. In fact, do all the current and if there are any. So I'll go back and fix that, of course, in a second. I always forget that they're the same thing. They're all liabilities. You're just splitting them up, aren't you? So deferred tax here is 30, 30 and 52. 30 closing balance carried down 52, and then this is deferred, and then opening balance current tax. Current tax is 185 and 176. 185 carried down 176. Okay. 185, 176. Okay, so this is the government grants. I can put those together as well. Government grants here, current 40 and 50. I'll just insert those here as well with the government grant 40 and 50. It's just splitting it up. It's the same thing, isn't it? This is more long term. Long term. I'll just put here short term. Long term. Short term. Yeah, then let's look at environmental provision. I have a provision here of 24 and then 76. And of course, these provisions are typically affecting the income statement, aren't they? Sorry, affecting cash flow from operations. Environmental provisions. These are provisions you're putting through the income statement. If you, oops, how long have I gone? I'll just do this and then check the time. Well, I'll just finish this off. 24 and 70, 24 and 76. So let's do that. Opening balance. 24. Closing balance. 76. And then I have here, who's next? So trade payables, 518 and 600 and 518 and 680. Let's just do that. Trade payables. I'm just looking for movements. Trade payables. Balance. 518. I think that's what it was. 518 and 680. Closing balance. 680. Accrued interest to have 0 and 4. 0 and 4. Accrued interest. Opening balance. Nothing. 0. And carried down. 4. Oh, right. Yes. And I think I said that this is what we're really trying to find. We're trying to find the movement between this. You started the year with 34 and you're at 64. So we know what the actual cash movement was. We're just trying to understand what caused it. And 63. We can see just add the two together. When I say add the two together, because you have an overdraft here, don't you? So we see a fall in whatever 97 or something along those lines. So taxation, I've dealt with this. I've put this with the other with deferred tax and government grants. I've added those two together. And yes, I think that's a good place to take a break. So you do all your T accounts, and then it's really now a matter of let's come in and let's start adjusting things to understand the cash movements, and then we'll put all the cash movements and take all the notes as well into consideration, and then we're going to adjust and deal with it that way. Okay, great stuff. So I'll see you in the next video.